Chia boy. Morning, guys. It's Goose from the Wise Wealth Discord coming at you. We're going to do another watch list, see what some of these levels are looking like. As you can see, we're going to start off with the SPY. We were here last week at the start of the week. I was explaining that we could get that big bounce, but in bear controlled markets, you likely do get big. When people start to cover and they look for better positions. What happened is they came right into this resistance line and denied pretty hard. Now we're going to set up that lower low this morning. We have that lower high, now we're lower low. So that's kind of confirming kind of a little bit of a bearish trend. If you do look in the short-term time frames, you can see that there was this gap here on SPY that we were waiting to fill, and it finally did fill that. At least in pre-market it has. We could always change this session setting to see some of the candlesticks a little bit more. But we finally filled that gap. It did gap below it, so now there's just a little bit of liquidity gap there. Still overall though, structurally, when you do like back it up, let's go to like the 4-hour or maybe the daily. Although it's been a little bit, rough in the last few days, where it's like we're getting that steep pullback, pretty much close to a correction now at this point. Oh, that's a trend line. I meant to measure that. We're despite a little bit of that fear and that happening, we're still holding up pretty well. It doesn't mean that there's not still more downside to happen, but it's like until we like get to these July highs, I think it could just be a little choppy and drop a little bit more. I'm not sure. I usually always say the same things as like, oh, I don't know, it could go this way, it could go that way. It's because I don't really want to sit here and try and predict exactly how it's going to happen. We're going to react. So it's like we have our lines drawn. Now that the gap is filled, does that mean that we get this bullish push up into this, previous resistance at like 594, 595? Lots of earnings starting to come out, so once that comes through, that'll be extra added volatility. We have the FOMC next week, so it's going to definitely start to get very volatile. There's going to be some rapid moves here in January. QQQ, same story. They're coming right into July highs this morning. I kind of like this area for a buy the dip moment. When things gap down and now they're starting to get into the 5%, 7% range where they're drawing back. Some of those areas are places where I would love to buy. And it's like you start to look back into equity. The one thing that is scary that I was preaching last week is the 10-year still continuing to go up pretty high. That breakout level still is pretty dramatic. And the faster they rise, the worse it gets for stocks. So you can see the inverse relationship. Like as this breaking out, what's Q's been doing, SPY been doing, they've been, starting to dwindle a little bit. So we do need the 10-year to start to back off a little bit. The dollar needs to back off in order for stocks to get a little bit of breathing room. But some of the levels I'm looking at really like SPY right here, the gap's filled. So right at open, if it stays here at like the 576, 577, that could be a great buying opportunity. If it does continue to fall, we still have July highs. This is a big point of confluence at 565. That'll most likely complete the correction. I think that's about 10%. Maybe not quite. It's only 7.5, but still a steep pullback, and definitely always scares people every time these like red weeks start to happen, because it starts a decent trend. And I'm not saying that this bearish trend can't continue to keep going, but as a long-term investor and then option trader as well, it's like I'm looking at certain levels below and I'm like, okay, you could find buyers here. Maybe buyers want to step up here. Maybe they want to buy here. And it's like, as much as I would love to be able to predict the exact moment, buyers are going to step in, when's the bottom, when's the top, and sellers, step in up here. That's not feasible. So it's like I draw my supply and demand levels, and this point right here where it's opening up at is exactly where it's like I would love a retest to happen. And these things are happening in the bigger time frames. And I don't want to preach private buy the dip, but it's usually a good buying point. And CPI is this week. I didn't really quite go over that, but CPI or PPI is Tuesday, and then Wednesday we have the CPI, retail sales, unemployment claims. So we do have some red folder news coming out this week. PPI and CPI usually have like different reactions. So since we already got the CPI, I don't know what it came in as. See it up here? No, it doesn't have it updated. But they usually have different reactions. If it's, say bearish reaction for PPI, sometimes it's bullish for CPI. I don't think CPI is going to be that drastically different, and that's kind of what it seems like people are trying to price in as like a hotter CPI. So if the market does like it and we're at these levels, I think that's about a dip opportunity. I sound crazy, because how Reddit's been and us losing the 50. I understand, things are starting to look a little sketchy, but I haven't quite lost hope until, these big levels that we're opening up at are lost. And yes, we're opening up right at big supports. If we lose these, then SPY most likely tests its July highs at 565. And then Q's is right there, so that's even worse. That can start to fall back in this range. You don't see much liquidity until like the 490. And then you have the 200s down below. If you go and test the 200s, that's pretty much the ultimate level because, how long have these trends been going? So I still see that there is a bullish trend intact, but obviously in the shorter time frames in the last few weeks, we are starting to get some bearish momentum. And it starts to build momentum over time. It starts slowly but surely. It started since FOMC and it keeps grinding down and down and down. But my question is, and what I'm trying to like navigate through is where are the buyers going to step up? You know what I mean? At what point does IWM start to step up? 10 years been just absolutely going crazy. 10-year needs to slow down or relax and, ease people's mind. And I don't think that happens until like the CPI data and things like that. But we're coming right into the 200 on IWM. We did break that ultimate trend line that I was saying was bouncing from off that bear flag, but breaking that isn't that great of a sign. The 200 is the last step. If it does break that 200, then you're at risk of getting back into this range. So right now, you're holding this top range. As you can see, it was ranging here, breaks up. This was new support. So if it starts to break below these levels, then yes, you're in range of 190, something like that. IWM is a little bit more risky. You can see that people are risk off as these things are happening. We've already had a correction with IWM. We are well below it at 12%. Bear market is 20, so you'd have to get down to like the 200, start breaking the 200-day moving average and stuff to that nature. I still personally don't see it happening. I don't think this is the crash because it's like one of those things where when the job numbers comes in hot, yes, I know we're backing off our inflation or our interest rate decisions, and we thought the Fed was going to cut at least 2 to 4 more times, this and yada yada, and then it never happened. And now that they see that the economy is a little too hot, they get afraid that that isn't going to happen. But realistically, if the economy has jobs and we're growing, I understand inflation is coming, but is that a thing to sell all your stocks for? Do you sell your stocks because an economy is doing better than expected? And I understand we want it to slow down because we want inflation to come down. That's the goal. But at the same time, you don't sell all your stocks because an economy is doing well. You sell your stocks because an economy is in its bust cycle. It's in the recession cycle. So if those signs aren't showing that it is in a recession, I think that's the lesser of the two. But if the Fed does have to raise interest rates, that will, begin a very bloody trend if they do. But I'm not sold on that yet. I get there's a little fear that it's coming back, but I'm not sold that it's like not in the right direction. Like the trajectory just isn't there. But that's just a side note. We still need to look at our levels on equities and indexes. Apple, I want to see them above 237, 240. Start to test this 50-day moving average again. It definitely, I wanted it to hold this and it didn't. It just keeps selling off. So that's concerning because Apple is one of the top dogs. So that's part of the reason. I mean, that's a nice correction. If this is one of your long-term names, do you start to question where you want to buy? Do you start accumulating somewhere in this area? Because buyers will step up. Is basically what I'm trying to say. Is I know every time it comes down 5 to 10%, you start getting these YouTube videos. Oh, crash this! Here goes the 25, 30% crash. Very rarely does that happen unless there's like, that black swan or job numbers are bad. People do start losing their jobs. Unemployment's at 5%, 6%. Yields are going way higher. Yes, you have a lot of bad things happening, but in the grand scheme, I try and keep a level mind and realize that I'm looking to accumulate. And the cheaper I can accumulate those things, the better. So I don't have much fear for some of the things that happen now as I'm looking for a bigger growth rate in the future. And that's just kind of how I'm looking at it. I hate when people get super fearful and like, you can just see their emotions are just absolutely like destroyed because of, major media outlets and stuff pushing these shares against you. And, it is what it is. But Meta, double top, you know what I mean? It's when indexes and ETFs start to get bearish and start to see a sell off, then the toppy formations start to form. Just look below. We still have the 50. It still has the most strength, and it's back in this range. If it starts to lose this level, we could definitely go test the 50 again. You can see in the shorter time frames that would be a solid trade. Either hold this level, break up, or create that higher high at 635, where we lose the 609 area. We definitely need to test the 50-day at 590 area, 592. But still a beautiful flag overall. Like if you were to take a lot of this off and change it to like the daily, I guarantee you it looks pretty solid. Yeah, it was kind of a weak candle. It did start off a little bit stronger. I was looking at it up here, but relatively weak candle. You do want to start to get above this wick high at least because this was the close for that day, and you can start to work your way through some of that liquidity. But I think Meta is just one of those companies where it's like I wouldn't short it personally. Every time you see it get knocked down, it usually gets bought up pretty rapidly. We'll see how the week plays out with CPI reaction, but I think it's going to be one of those weeks where we get like a rally. I truly do. If we continue to fall, call me wrong this week, but last week I was explaining that we could get that rally, or yeah, we could get that rally, but we'll see what happens at the resistance. It's kind of that same thing where we're creating that leg lower. Now I'm anticipating that into the end of January we could get that bullish reaction, maybe even break out of this and then get a bigger fall. That's just kind of like what I'm forecasting. I'm not quite thinking that this flushes through and we continue to go down in the next, few days to the week. But who knows? I could be completely wrong. I'll continue to play my levels. That's the beauty, is that if it does flush through, I could still catch a short. My forecast and my thesis is that it may not play out that way, but that's how, what would be most ideal if like Apple, it's starting to get to that oversold area. Are we going to have that bounce? Are sellers going to stop and buyers going to want to start buying this dip? I believe that's coming soon. And when Apple and Nvidia and all of them start heating up, Nvidia had that huge breakout. It couldn't hold these levels. It couldn't hold these levels. And since that 50 break, it was a big short. That was kind of what I was explaining as I saw the retest. And I'm like, is it going to hold this? That's a big level. It had that break of it, lost it, and now it's selling off pretty heavy. Stocks don't really look that great right now. You could tell they're in a little bit of a bear thing. But to me, I don't get afraid because I know that I still have another 30 years left of investing and accumulating. So these short-term things are best for me. I wish Nvidia dropped another 20% so I could buy more. Google, it still is flagging up pretty nicely. Like there's still some bullish look to Google. I like it, showing a lot of strength. We'll see if it continues to hold this level. Maybe it comes down in the 188, but I could see buyers stepping up. If it does start to get above 200, that's the biggest level it's got to work through. It has right now. It has a double top look, just as Meta does. 1, 2. It's just touching these areas and just getting denied. Buyers aren't, willing to continue to keep paying for that. So as it gets denied, there it is, a little bit frightful, but not quite until that support below is broken down. Amazon, the flag is kind of breaking down, but you can change up the flag. I know I'm sounding like a perma bull right now, and I'm not afraid of anything, but it does still look pretty bullish on Amazon. That still looks like a pretty technically sound thing. It's coming into the 50. I expect buyers to start stepping up on some of these levels. At some point, these buyers will come through. Is it going to flush the rest of the week? I don't know. Netflix, we did see the huge divergence. I love this play that it did, the trend started weakening and then it sold off. And I was showing you this divergence. Look at lower, 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 but then higher, higher, higher. It's pushing that divergence even further. And the divergence to me is like the rubber band theory, where if the market gets too overextended, then it has that rubber band effect where it's like if you pull a rubber band too tight, it pops back, it comes back at you. And it's just like the market is like, if you pull it down too far, you know what I mean? The RSI is a little bit further extended, then it's going to bounce back. You're going to have that bounce. It's a rubber band effect. And RSI or divergences to me show me that rubber band is that it's starting to pull, 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 pull. It's not that you can't continue to keep moving the rubber band in one direction, but that at some point someone lets it go and it bounces back. So it's like at some point someone lets it go and it sells off. And now that it's getting down here, rubber band too far, is that too oversold? Do we have to come test this 50? We shall wait and see. But that's how I look at the market. It's just a good visual to know that those short-term bounces or those short-term, push-ups can be sold off just as quick because it's like a rubber band. You're loading it up. So when things start to get extreme, like if QQQ started getting down to this level and in a quick amount of time, I would assume that there's going to be a solid bounce back. There's going to be, some dip buyers that are going to try and get in there. But it's the overall trends that like you'll start to see, resistances and stuff to that nature. It's like the weekly, yes, we had a bearish engulfing, but we didn't quite close below these lows. There's buyers here in this area. And if we do come back and test it, I'm going to want to probably, start accumulating in the 500 area. That's how I would play it. I think there would be a good bounce, but we shall see. I think this is very healthy action, though. I think this is the pullback and things and the huge breakup that we needed. And I think this is the buy the dip opportunity. I truly do. I think with the Trump administration coming in, crypto's going to start going crazy. Like, I understand crypto fell from 100,000 to 90, but it's still like relatively just sitting here. And I don't know. I'm not the one that wants to short this quite yet. I'm not screaming, like a lot of other people are. Here's the crash. Here we go. I think these are some levels to continue to keep buying, and we'll see how it does play out. I could be completely wrong, and I will be humble about it. I will, explain next Sunday. Oh, I was wrong. It continued to kept going. But that's the beauty of playing your levels. That's the beauty of watching these things play out. Is you could play both sides and still kind of have a bias about where you think the thing is. I've been wrong plenty of times, but I've also been right plenty of times. It's like that's exactly how it played out. I think CPI gives a bullish reaction. I truly do. I think yields are a little overextended. I think the selling on certain things are getting into those support levels. I think we see a bounce. I could see 510, 515 in the intermediate, and then if we do have a face ripping rally with earnings and stuff to that nature, 520 to 530 in my upside target. If we do drop below, like I was saying, we have this 485 level for 475 in the 200-day moving average. SPY starts to break below this gap below 575 and the 560. July highs are the biggest levels, and QQQ is opening at July highs. SPY is still a little bit above it. We'll see. It has some wiggle room. IWM continues to fall. The 200 is kind of scary to lose. It's probably going to bounce off this level for sure, the 210, and go test that 200 if we continue to keep flushing. But got to capture that 200, fill this gap, and we'll start talking up here around 215, 218 if that does happen. So we'll see, guys. I appreciate you guys tuning in. I'm sorry if I rant a little too much. I want to give you guys my mindset on investing and long-term investments, how I see the market, stuff to that nature. Just trying to teach you guys as much as possible in these videos. But good luck this week. We'll always keep you updated in the Wise Wealth Discord. Please join that if you haven't yet. It's completely free, and Jimmy and I give you great advice. And there's people that chime in. They tell us what helps them, what their strategies are, what stocks they're getting into. So I would love for you guys to join the community as well and be a part of it. I appreciate you guys tuning in. Let's have a great week.